Hello and welcome to Global Business Insights, where I bring updates on the main business stories as well as analysis on global markets and all you need to know on the most important macroeconomic data releases as they come out. Yesterday at Open, US stocks hit a pause button on a record-setting rally as focus turned to Q4 2023 earnings for clues on how 2024 would look like. Still, the S&P 500 closed at a record high yesterday for the third session in a row. The Dow Jones average, however, slid 0.3%, while Asian shares this morning rose on renewed hope that Beijing will offer fresh support, which will boost sentiment. European stocks are also heading for a positive open. Brent crude remains volatile, under $80 per barrel in early morning trade, while Bitcoin, now under $40,000, is still inching downwards. In the US, Wall Street titans have started to take seriously the possibility of Trump's return. JP Morgan Chase CEO Jamie Dimon last week said Trump was kind of right on some issues and accused Democrats of scapegoating his supporters. Yesterday's win at the New Hampshire primaries further paved the way for Trump to clinch the Republican presidential nomination. In today's morning episode, the top story is Netflix as it announced its best ever subscription gain in Q4 in Q4 release. There was an outperformance with 13 million new subscribers. And we'll also talk about the recent survey at the European Central Bank, which has slammed Lagarde's leadership. Also, there is talk of tax cuts coming in the UK this year. We'll talk about that. Yesterday, it was reported that an Amazon warehouse was slammed with a $35 million fine for monitoring staff. A lot of HR issues today. We'll end with data. Europe's largest economy, Germany's Purchasing Managers Index flash for January came out. The Euro area PMIs will come out later. Later in the evening, we will talk more about global stocks and especially also PMI data from the Euro area and the United States, all coming out later in the day. Netflix shares got yet another boost as its shares traded sharply higher in pre-markets following better than expected revenue and a convincing subscriber beat in Q4. Netflix posted after trading hours yesterday revenues of $8.8 billion, up 12.5% from a year ago, and profits were $1.98 billion or $2.11 a share, which was 4 cents below the company's forecast. Netflix also added 13.1 million net new subscribers in the quarter, higher than the forecast for 8.7 million net additions. Also the best ever. And looking ahead for the March quarter, Netflix is seeing revenue of $9.24 billion, which would be up 13.2%, roughly in line with previous estimates. Q4 profits also expected to beat market consensus at $4.49 a share. Introduction of lower-priced ad-supported subscriptions and the crackdown on password sharing seem to be working as Netflix cements a market lead with a strong cash chest boosting content quality and quantity. Great content like The Crown and David Fincher's film The Killer are definitely helping. Netflix is also strengthening its position in the sports entertainment space. Earlier in the week, it announced a 10-year, $5 billion deal to house all world wrestling entertainment shows starting in January, including those outside the UK. Looking at how Netflix is doing in pre-markets, Netflix, as we can see, is already up about 8.66% in pre-markets as we speak. It's about 7:30 in the morning GMT. Bad news for Madame Lagarde at the ECB, where a survey run by the European Central Bank's Union showed that over half of respondents see Christine Lagarde's presidency as very poor or poor. The survey showed Lagarde was too focused on matters unrelated to monetary policy and had fostered a negative atmosphere at the Eurozone's central bank. The survey held between December 12 and December the 22nd last year showed staff were divided on effectiveness of monetary policy communications, and over 50% think she may not be the right president for the ECB at this point in time. That's tough, but accountability and performance management in a technology-driven environment is going to be increasingly more flexible, more dynamic, and driven by these types of 360-degree inputs rather than the periodic traditional individual assessment. So we should all be ready for it. The idea is to get more people-centric leadership styles, better team engagement, and involvement. Qualitative comments in this survey describe Lagarde as being an autocratic leader who does not necessarily act according to the values she proclaims. You know what they say, uneasy lies the head that wears the crown, but the ECB boss is fairly well compensated for the inconvenience she has to bear with an annual $421,000 pay. Still peanuts compared to what her peers will be earning on Wall Street. Christine Lagarde last May may have become more unpopular when she rejected calls to link staff pay increases at the bank to the record high inflation, saying future adjustments must be reasonable. Tomorrow, she will preside over another monetary policy meeting where a decision to hold interest rates is expected. And still on staff matters, a French regulator announced that it had fined the manager of Amazon's large warehouses in France $34.7 million for excessive monitoring of its employees. The French Data Protection Authority, CNIL, said Amazon France Logistique gave employees scanners in order to record workplace tasks such as removing items from shelves and packing. And the data was then used to calculate staff productivity and periods of inactivity. More power is shifting to employees in the new normal as regulators step up in their role of looking after shareholders, including staff. People will also be playing a key role in the new technology assimilation of new areas like artificial intelligence. Amazon strongly disagrees, of course, with this fine and is preparing to appeal, saying that warehouse management systems are industry standard and necessary for ensuring safety, quality, and efficiency of operations, and was not used to monitor employees. The radar is now increasingly on what is the right and wrong way to manage performance, especially becoming increasingly difficult to prove poor performance and distinguish stars in a way that is appropriate. Big tech firms hoping to leverage new artificial intelligence must note that according to surveys, 95% of workers see value in working with Gen AI, but their top concern is that they don't trust organizations to ensure positive outcomes for everyone. In other words, Gen AI will be used to enhance profits, even if necessary at the expense of staff morale. But companies are also companies also need to understand that it's the people, not technology, who understand the purpose of the company and what it's trying to achieve. So they will need the trust of their staff. It's also the people that will make AI work to maximize the value that it promises to deliver. Therefore, any automation or system that is used in a way that breeds discontent is like shooting oneself on the foot. The smartest companies will be engaging people more openly and are involving them in creation of these new tools, and also having a diversity in inputs, getting diversity in inputs to avoid replicating old bias in human decision making. Let's see how the Amazon appeal progresses. Public sector borrowing in the UK was down to £7.8 billion last month, about half the sum it was a year earlier, also the lowest figure for a December since 2019. This is according to the Office for National Statistics. This was due to lower debt interest costs, which came in much lower than the £14 billion predicted by the fiscal watchdog. The expectation is increasing that in the November's autumn statement, the Finance Chancellor Hunt will try to cut business and personal taxes by as much as £20 billion as they spend less on debt and hope for faster GDP growth. But will the Bank of England play ball by cutting rates earlier than usual? only if the data, of course, permits it. So far, so good. Consumer Price Index was up 4% in December, compared with more than 10% a year earlier. But looking ahead, it's looking somewhat stickier than many had expected. As governments tilt more towards populism and voters are focusing less on fiscal rectitude and more on what they have left in their wallets, Rishi Sunak has a formidable balancing act to remain in power. He's more likely to risk the angst of fiscal observers by moving forward with substantially unfunded tax cuts, which could endanger the sustainability of the public finances. But who cares if he gets another few years to fix it? As I wrap up, US Secretary of State Anthony Blinken has described economic reforms in Nigeria as bold. President Bola Tinubu yesterday held bilateral talks with the US. Blinken also said Nigeria offers real opportunities for investors, while there are still long-term challenges that need to be addressed. Also, German software firm SAP yesterday unveiled an over $2 billion restructuring plan covering 8,000 roles as SAP focuses on artificial intelligence-driven business areas. And still on Germany, not exactly good news. We just got the first Purchasing Managers Index data for 2024 just out. The Hamburg Commercial Bank S&P data just out. Germany composite PMI fell further to 47.1 in January 2024 from 47.4 in December. That's short of expected 47.8. That's the preliminary estimate, the first estimate. Also, the seventh straight month of decline and the fastest pace since last October. Manufacturing production contracting the most in 8 months. 43.2 was the figure for manufacturing, while services PMI was 45, down from 45.7. Services activity also fell at the fastest pace since August. The graph we see increasingly brings out the correlation between the inflation, CPI, and PMI. As inflation seems to be peaking, we also see PMI attempting a rebound, but also seeing new headwinds like the Red Sea chaos, unsettling geopolitics, potentially snarling supply chains. And that could also raise costs of inputs and hurt demand. So let's see what the revised figures show later in the month. On earnings, companies reporting today include Procter & Gamble, 3M, Johnson & Johnson, and Texas Instruments. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for watching and bye-bye.